Obviously, oil prices jumped on the news. Both Brent and WTI both jumped over 4% at one point. Things started to calm down a little bit, but they're still both up around 4% just a little while earlier. This obviously as uncertainty grows over the potential repercussions after the killing. Now, the global oil market just capped a roller coaster year, and one analyst thinks that the current skyrocketing trend is, however, unlikely to last. Take a listen.
Iran is, and also the Middle East, one of the major supply of the oil to the globally. So that's why the oil price will rebound. But for U.S., actually, there's a lot of strong supply of shale gas and also the oil. In the recent years, so that's why I think the oil price cannot, rebound quite a lot.
Well, that's one analyst's take on the current oil market movements. But oil prices are sensitive to geopolitical tension, particularly in the Middle East. Now, let's look back at some key events in the last couple of years. Tension started to rise really after Donald Trump pulled the US out of the 2015 nuclear deal in May of 2018 and started imposing sanctions. Now, then last summer, tension rose in the Gulf, starting with attacks on oil tankers and the downing of a US drone and the seizure of British tanker Stena Impero, if you remember, in the Strait of Hormuz. An attack on Saudi Aramco's oil facilities was a major shock, and that was back in September of last year. Now, those major events in recent months have had significant impact on the oil market each time, as you can see on how Brent crude prices moved in the past 3 years. You can really see that the US pullout of the nuclear deal set off a roller coaster ride there. About a fifth of oil traded around the world goes through the Strait of Hormuz, where tankers came under attack last summer. Now, in previous flare-ups in tensions with the US, Iran threatened the supply of oil from the Gulf, and that's because sanctions on Iran's vital energy sector are really hurting its economy. According to the IMF, Iran's GDP growth for 2019 is estimated to have contracted about 10%. That's a spectacular decline, given that the economy grew 12.5% back the year after the nuclear deal was signed.
OK, well, a lot, therefore, for investors to be thinking about on the final day of the first week of a brand new year.
That's right. Well, the global stock markets actually started the year on a positive note, but that's no longer the case. Obviously, today, all major European indices are in the red today. This after starting the year on a positive note, following off from the Wall Street's record finish. London's FTSE down about 0.5%. Paris's CAC 40 down 0.6 of a percentage point, and Frankfurt's DAX down almost 1.8%.